CTM. What's going on, everyone? I hope you're well and doing great as we get ready here for our Wednesday, our wonderful Wednesday session. Aldo, session expectations sky high. When have they ever not been? We're doing what we do each and every day, and that's for making sure that we show up and we put the work in. The fruits follow. The fruits are abundant. It's making those small incremental improvements that wind up as you look back, whether it's 3 months or 3 years, and you say, oh my God, wow. Here we are. Everyone, we're going to start off here today looking at what's going on with Bitcoin in 2024. We're starting off here and we have our chart in motion over here. Our chart is showing some of the major events that have taken place ever since the Fed began tapering down their QE purchases. That's when the tightening cycle began. That's when Bitcoin came off. Rate hikes then began and Bitcoin made its second major leg down. That caused the collapse of Luna. It then, soon thereafter, caused the collapse of Celsius, 3 arrows. Price rallying back into that Luna low becoming resistance. And then price here coming back down to test those 3 arrows and Celsius lows. It looked like that price was looking to put in a bottom that October, right along with liquidity, global liquidity beginning to rise. But then we had this famous tweet between Sam and CZ, where at first you were going to see Binance go ahead and give FTX a bailout, absorb them. And then CZ said that's not going to happen. And then you saw the collapse of FTX, Bitcoin making new low below the previous cycle ceiling, but not where price made an all-time high, because for a few days price traded, not too much volume trading hands, but price traded up to between 19,400, 19,600. But where price formed resistance right around 17,250. That's when we saw a price peak above. We put out bull market prediction, and then not on the first attempt, we got to get back on the right side, short side. On the second attempt, we were able to take the earliest opportunity above 17,250 of the bull market breakout. Go back into December 2020 on the channel, you'll see bull market prediction. And then after there, and since we have maintained that upward trajectory the whole time, we have been watching what would happen if this trend line broke. This is a structural trend line. We'll come back to that much later in the session. This would be an invalidation of the bull market breakout. Even things like the US banking crisis, the SEC bringing lawsuits versus Binance and Coinbase, they have yet to take out the bull market breakout invalidation line. We did see a couple of positive things occur in the later half of the year. That began with BlackRock filing an ETF application. Then we had the court ruling in favor of Grayscale that indeed they can convert their fund into a spot ETF. And then the intern leak, the spot ETFs are coming. Price has risen up until the launch of the spot ETFs, which have just occurred. We're going to start off here with some four-year cycle awareness, and why I myself do not any longer. This is coming back over here to 2022, 2021. At the end of the last cycle, I said that if we did not have a blow off top, at that point in time going forward, we would not. I mean, we follow from afar that four-year cycle awareness, which I personally believe is pretty sharp, probably amongst the sharpest out there. And when I say that, you could go back to the tweet we have early here in January, and we pointed out, and we what was the 0.786 retracement fib. We haven't touched it yet, but everyone's awareness at this point was still mega bearish. We have kissed it. We're close to kissing it. The question is, will it happen before or after the halving? I want to take a look at some things with you. I just want to make sure that you all understand that even though in this session we're consulting some aspects of four-year cycle behavior, it's not something that we personally need to do whatsoever, because we spent the whole bear market, March 14th, 2022, CTM 2.0 was launched, pure mechanical trading. Nevertheless, you should, for fun, have that passion that you could express throughout the markets. You should express it through technical analysis. You should express it through macro. And you should do your best to be the best at it anyway. We have a couple of things that continue to be very similar. And amongst them is that as we are headed towards the halving over here, you could see that price, once again, is very close to the 0.786. It missed it by $1,000 and change, hitting the 0.786 retracement fib. You could see in the last cycle that prior to the halving, it did reach that point, and then you could go back to the previous cycle before that, and it also had reached it. One thing that is different this particular cycle is that you could see that price has crossed the yellow trend line. The yellow trend line is the last trend line resistance that the bear market has before taking off. And you could just go back and you could remember and you could say, well, I remember you guys very clearly, and I'll just jump over here to a price chart just to get it exact. You guys were looking at what it looked like when we had the first trend line break. And you could see that that was over here. And again, in January on the Twitter feed, that was also not only done here on our live streams, but we said, okay, after the previous cycle ceiling, we now have the first confirmation that a repair has taken place on that break of that trend line. You could see the retest coming in once and then a resumption up. You resumed right up into that horizontal resistance from the Luna low, and then the rally off of the collapse of Celsius in 3 arrows. You could see that's where we resumed into. And then we saw the regional US banking crisis develop. Interesting that we came right back in for a second touch of that trend line before resuming up. This is the last one. This is a one touch also. and you will find that there are people out there who they're like, you need 3 touches for a trend line to be legit. No, we do one touch CTM trend lines, and it's one of the most significant edges and advantage inside the markets. But few people are able to see that structure. We're going to get back into that structure, especially when we talk about system trading a little bit, but we'll get back into that in a little while. One thing that's different this time is this is the earliest price has ever broken out of the last trendline resistance. You could see in the last cycle, in the previous cycle, the breakout occurred. Remember that? We called that live on a public YouTube stream in the summer of 2020. As the breakout occurred over there, and you could see breakout, retest, resumed up, quick and sharp. And then you have the cycle before it. It occurred before the halving, but this was about 60 days before. This occurred over here. We're on a 3-day time frame. This is 60 days before. This time, it is very early, and it is occurring over here roughly 140 days beforehand. So that's something that's quite different. I would look at that and say, well, that might be pretty bullish. Last time it was after the halving, and we had a nice bull market. This time was before the halving, and why we had a retest also. That was a beautiful bull market. We'll look at the similarities between the past cycles and this current one in a little bit as well. Another thing that you could say that is different this time is that, well, price has yet to make the touch into the 0.786. And aside from that, there seems to be a lot of similarities. One thing that I could see and make the case for is that at the time of each halving, you could see that price was right around the time of that yellow trend line. You could see it in both instances prior. If that were to happen again, you would see price around $35,000. I don't think that many people would be surprised if they were to see something like that occur. A lot of people are caught up on past cycle behavior. A lot of people not riding it from the low and then during the massive accumulation zone and then to the top. It's after we saw price peak in this last cycle and during the bear market. A lot of people have now said, I thought we were going to see, lengthening cycles. We didn't see that. Let me go ahead now and focus a lot on what's happening in the past and see if that is able to help. I don't think it was it's a great question, Simon. Do I think that the market was front running this time? And that is why we saw the breakout occur the earliest to date. I think it has everything to do with this right over here, and that was the spot ETF are coming. It had everything to do, in my opinion, with the court case in Grayscale's favor, ruling that the fund could become, GBTC could become a spot ETF, and then this run up into the spot ETF launch. That's why I think it happened earlier, and we'll take a look at those flows in a little bit. But I just want to go ahead and start off looking at these past cycles from the point of the halving to where we are today. And you could see from where we are today in the previous 2 cycles until we get to that halving, the halving is roughly 90-something days away, except that the thing is that it's not in days. The halving is every 210,000 blocks. And obviously, as most of you I'm sure know, that what the halving is every 210,000 blocks, or approximately every 4 years, the miner's reward for securing the network is cut in half. By the way, we had a flood in the house last night, and plumber came over late at night to help us out, and he doesn't know anything about me whatsoever. And late in the night, he asked me what I do, and I explained to him that I was in finance, and he asked me what I thought about Bitcoin. And, I try to express to him that you need to think of Bitcoin as savings, not as an investment that you're going to make and then you're looking in, a short time frame to make a lot of money, but rather you understand that any money you save in dollars, the purchasing power is going to dwindle over time. Whether it's 5 years from now, 10 years from now, I think everyone could agree that you're going to see that purchasing power erode. The opposite is with Bitcoin. And then he asked about, well, what about these other cryptocurrencies? And I explained to him, look, you have to think of Bitcoin and only Bitcoin as savings. If you are someone who's really involved in the markets and you want to go ahead and trade these different cryptocurrencies, these altcoins, that's another topic of conversation. And then the next thing he asked me about was, well, what are these miners doing? How are they mining Bitcoin? So I began to answer that question, and then I realized that, wow, I explained to him it took me 3 or 4 years to really begin to understand Bitcoin. It's quite complex and complicated. And any question that you ask, because I have devoted myself to really understanding it, I could answer, but you're going to see you're going to start getting confused. The first thing you need to do, in my opinion, is to think of Bitcoin as a savings, and then go ahead and after you develop some idea of how you would like to begin saving in Bitcoin for the long term, maybe you and your wife will need this for the retirement one day. Maybe you'll be able to pass it down to your kids and you won't ever need it. But then as you begin to take a position, then you could get into these other aspects of Bitcoin and begin learning about them. Even investing 30 minutes of your time over the course of a week. Forget Netflix, forget the TV. Go ahead and spend 30 minutes a week. And over that course of a year, your understanding of all these questions you have are going to significantly increase your overall understanding of what's happening. Well, that's a great question over here. And so there's Michael saying, well, what about when the taxi driver starts talking about stocks? You're at the top. It's an old Wall Street adage saying when the shoe shiner begins giving you stock tips, it's time to get out. And you're now seeing someone coming over to help at the house, and they're asking about Bitcoin. Is it the top? Are we at the top of the cycle over here? Is the top in prior to the halving? That's something that we're going to take a look at and answer in this next, in just a moment over here. But to answer that question, I think that the Coinbase app is a really good indicator. When you see that at the top of the App Store, which occurred in 2017, which occurred at the end of 2021, that has been so far a really good indicator of a top. I think, and you all remember, because I told you during our streams over here, it was around this time over here. It was somewhere around the summer that I told you that a lot of, and I found it interesting, I didn't know why, a lot of my friends' wives and from Mexico were inquiring about Bitcoin. And I mean, that wasn't the top, but for me, that was a strong signal of the further adoption that is beginning to take place, the next wave of adoption. Don't forget, you are an early adopter. Now with the launch of the spot ETFs, Wall Street's here, opening up the doors for a whole new class of investor, large pocket investors. They have the largest savings in a demographic that there is. And we are headed towards the next phase of that S-curve adoption. We're headed towards the early majority. We're still in that early adopters phase. I find it very similar to what happened over here when friends' wives were asking about Bitcoin. That didn't happen last cycle. Last cycle, it was the men who were involved. And they weren't involved in Bitcoin, and they were involved in Ethereum and everything else. And by the way, when I just saw them recently, the husbands, they had no idea even that a spot ETF was coming. These are people who, for now going on 5 years plus, have been involved in owning and purchasing Bitcoin, Ethereum, Cardano, etc., etc. So again, early phase here, but you could see we are broadening out into different segments of the population. So from here, from this moment on until the halving, you could see that what happened in the past is that price made this grind upwards in both prior cycles. Just from where we are now into the halving itself, you could see that price was grinding higher. Now this one over here is an anomaly. You could see that big capitulation, 62% down move that come off the global lockdowns. I want you to take a view over here at the halving tracker, something back in 2020, 2021 that we would consult often. And I want you to see what this cycle up here, the 2012 versus 2016. And this is showing how many days past the halving. And you might notice that they don't end at the same time. And again, that's because this is not measured in in days, it's measured in blocks. Every 210,000 blocks the halving occurs. So in this particular cycle, that happened to be roughly 1,320 days. And in this last cycle, that happened to be roughly 1,390 days. That's the difference over here. Here we are right now, and we're roughly 90-something days away from the halving taking place. If you look at these cycles, this time not from the halving, as we just looked at them, from lining them up when the halving occurred last, right? And you can see a lot of similarities have continued to occur. When you line them up from that all-time high in that November high, we can make some more observations. And you can see, by the way, as we talked about in this one over here, that slow run up that occurred. And even lining them up from the all-time high from here to the halving, you can see that we're getting close to a range. This was, again, a big, massive global lockdowns occurred. The blue line coming off like this. And you could see that, well, this time's a little different. This is the highest price has ever been coming into the halving when measured off the top. So we continue to make some observations, and it was brought up yesterday. Well, it's not possible, or it's not likely. I don't believe, I should say, that Bitcoin can make another yearly high in 2024 before the halving, because if you go back to last cycle, you could see that it had already made its high, right? And that's valid. I don't know if that's valid. We'll take a look at that. And you can see over here, this is having these past two cycles lined up from the high and just for different perspective. And you can see that price here from here to the halving in the past has risen. A lot of people think that in April 2021, Bitcoin had a bit of an event. It had made that massive run up. And that's where you saw a cycle, what the first peak of the cycle put in. And then a massive correction. In a bull market, 30% corrections are almost like a given. You have to be prepared for them. It is a volatile asset to the upside, to the downside. And then you could see price made a new all-time high over here afterwards in November. But a lot of people think structurally this was the all-time high, and that it was basically the amount of people just holding Bitcoin that almost willed price up to make that new all-time high. Regardless of what I feel, if you line them up from that April high, you could see the structure is very similar. Now, price made that you could see in each cycle during this particular phase, price made an up move. In the last one, it happened to make a new all-time high. They all made this down leg together right over here, and then have risen. And you could see, whether you're lining it up from the November high or from the April high, that this time Bitcoin is again at its highest point when measured off of the high. It's also of note that in these previous two cycles, from the top to the bottom, Bitcoin came off 84 and 85%. This time, Bitcoin only came off 76%. So you could see that volatility perhaps decreasing to the downside. This past year that we saw in Bitcoin has never gone through a year with a drawdown under 30%. This year, we only saw a drawdown, I think, during the banking crisis of roughly 22%. And I think we saw two corrections of 22%. If you do measure them from the April cycle, you could see that, well, it's not like a slow move into the halving, that we see actually some pretty sharp moves up in the last cycle and the one before that, which this cycle happens to resemble pretty closely in many ways. since the bottom has taken place. Let me just jump back and look at the bottom. I could say that these two cycles over here, the blue one and the white one is the present one, and the blue one is the 2016 cycle. I could say that, well, they topped at almost the exact same day, and then they bottomed at almost the exact same day. They were pretty close in resembling each other from the time of the halving to the peak to the low. And then you can make the observation that since the low, that the cycle prior and this cycle, with that steady channel and climb upwards, have both resembled themselves pretty closely. So those are two observations that you can make in similarities. And if that were to happen and we were to see like structural April high, then likely we would be seeing more a resemblance of what occurred over here rather than this straight one up over here. This is looking at those two cycles, and this is lining them up over here and off of the April high, and you could see that sharp move up. Let me come back over here, and I just want to point out one other thing before we continue. So let me do that from the standpoint of, I guess, this. So it was pointed out that, well, Bitcoin had made at this time its high and didn't make another all-time high, or I should say yearly high, right, until the halving occurred. So therefore, that this high that we've seen is likely the high. And it was brought up yesterday. I think that a lot of people likely think that the high is in until the halving. I don't. I think that there's a really strong chance that by the end of February, we will make a new yearly high on Bitcoin. So let me just go ahead and take a look at that and say, well, as you're looking at this occur over here and price not making another high, that's roughly around over here at this time in April and into May of 2023. And a lot of people who have begun consultant 4-year cycle theory, they said that likely the high is in around 32,000, right? Because in last cycle, that's where the high was put into. That's not what happened. Obviously, price has significantly taken out that high and continued higher. So if you're saying, or you're consulting the previous cycle and you're saying, well, at this particular time last cycle, the high was in and that was the high to the halving, that's not going to work in so much as that, again, that's what caused people to think that the 32,000 was the high, because that's where the high was made previous cycle. Not only have we broken above the yellow, which we didn't, we've taken out that area as well. That's not something that I personally would factor into the equation. Now, the high could very well be in. We'll take a look at that in a moment as well. I just don't think that would be a reasoning for believing that. However, we could look at some seasonalities. This is looking at Bitcoin monthly returns, right? Don't forget, we came off of 4 months in a row of green coming into the end of the year. That's only happened a couple of other times. It happened over here in 2016 and 2015. Both of them had 4 months in a row of green to end the year. And in both those occasions, the following year were red months in January. One pretty substantial, right? Minus 15%. The other was barely red, break even. Right now, we're about break even here on the year, as today Bitcoin is trading off on the day, but we still have a couple of weeks to go on this month, and including at the end of the month, FOMC. That's a big FOMC meeting. As we get into the macro portion of this particular session, you're going to find out why this is even a bigger deal, this meeting we have coming up, I believe the 31st, the last Wednesday of this month. Now, February, though, happens to be a very, very green month historically. Not always. There have been 2 months. In 2020, which was a halving year, this was not a green month. And then in 2014, this was also not a green month. But on average, Bitcoin has a 13% gain during this month. I would say seasonalities really, really favor February being a positive month. And you could also make the case that in the last 3 years, when you've really seen, let's say, TradeFi, traditional finance, seasonalities affecting Bitcoin price, They thus far, with the exception of last year, which was break even, have been pretty good months. Before we continue on, the big picture, right? We talked about in this particular session how we are going from early adopters into the early majority. It will be looked back upon, in my belief, that it was the launch of the spot ETFs within Bitcoin that opened up the doors for that adoption to take place. And you could see, just like you could get caught up in some small things, like is the high in for the year before the halving, where you could keep your eye focused on what really matters. I also like looking at it from this structural line. When I say structural line, the line you're looking at on this chart, if you come back over here and you look at the bottom line that we looked off of the bottom that we call the bull market invalidation line, and you all have seen the charts showing that this is the structure of the market going all the way back to 2014 on Bitcoin, and you can see that price continues up and to the right. Very, very important to look at. What's kind of neat, I just want to do for you really quick, if I jump down to a smaller time frame, I just want you to see really quick as you look at that top that occurred into November and that a top that you looked into April over here. If you go ahead and you just throw a line over here, right? I'm going to just throw a line and you can see right here off that November top that structure is what took place. Same thing over here off of that April into May. You could see that the structure of Bitcoin is what in both cases showed you that we were topping. Now, that's not to say that every top of Bitcoin will have that structure. And I wouldn't think that, well, because we don't have that occurring right here, that should be the top or anything like that. That's kind of irrelevant to what I was looking at and or thinking. But for near term, because we're always all focused on the near term, let me just show you a little bit what's going on over here. We have two trend lines that I'm focused in on. This is coming off the December bottom. This touched where we had the US banking crisis, and then again over here in this moment. And you could see even on that massive last expansionary phase off the spot intern ETF leak, you could see that trend line holding as support the whole way. If that were to break, I would think that likely is setting up a bigger correction. Bitcoin off of the top in 2024 thus far has corrected 15%. Really not a correction for Bitcoin, specifically in a bull market. Coming down to this trend line over here would be 27%. That would be a significant correction, I do believe. You could see the reason I have this line down over here, though, is because you could see the touches. You could see this is support, resistance. Again, that area of support, and again as resistance. If we were to break down, there's, this is a place that I would be looking for this move to find some support. But we are into support right now. You could see that we are into this area of support as we speak right now. And I'm going to go ahead and I gave you that one line. I'm going to give you one more because I'm going to move this line, the structural line we have over here, to this peak and to where we touch perfectly over here. And then you're going to see a little bit better of a confluence, right? When I say a better of a confluence, if you were to break this area over here, right, that would signal, hey, that's actually some different significant confluence of support we're losing. If we were to lose this area, then the chances of a deeper correction on next leg down are significantly greater. But we're right now, we are holding this area over here, which is why I have it up over there, but I just wanted to give you that awareness. By the way, some updates over here as we talk about the launch of the spot ETF, and this is kind of neat. This was just shared to me right before going live, but a lot of people wondering, we've been hearing about all these inflows into Bitcoin. Why is the night price not going up? The morning of the launch of the spot ETF, we pulled up that tweet from Dylan talking about that likely you were going to see a lot of noise coming out of selling from GBTC. We have seen a lot. It's almost, I'm going to go to the punchline over here. After day 3 of flows, you could see that the total flows, this is including inflows into every single ETF except for Grayscale. And we're seeing outflows occurring from Grayscale. Don't forget, Grayscale also has the highest fee, 1.5%. Some of them, like I believe Fidelity, correct me if I'm wrong, has zero fees for the first 6 months. But I do believe that we're looking at 0.2% for BlackRock, significantly lower than the 1.5%. But you could see till today, we've had basically a small amount of outflows of Bitcoin, not inflows. So it makes sense here that price has been under a little bit pressure since the launch. It is expected that that movement, that selling of GBTC will soon subside. Once that happens, I believe that's where the turn is going to be made. And then we're going to start seeing that rise back up towards at least the top of this channel. Breaking above the top of this channel, this resistance, that then opens up the door for 57,000. If we break down that area that we were looking at that point, well, is it, Michelle, we're not seeing more buying than selling. We're seeing more selling than buying. This is the total, right, over here. So we've seen to date more selling than buying. Now, that's hard to say with the flows of the first 2 days. We saw more buying taking place. So I guess that's a little tough one. Yeah, is it Riot or Marathon is big on that with the Texas utility company they've partnered with. They over the summer, when you were getting that Texas heat, they were able to take their miners offline, and I forget what it was, but it was a few $1 million they were able to make in subsidiaries from there. Just day 3, now we're seeing we're gonna catch up was the point of this. I do believe that we're gonna catch up soon, and then we're gonna start seeing the price go with it. We also have seen since the beginning of January a couple of things take place that could also be affecting the price of Bitcoin, and that has a lot more to do with the macro. So let me go ahead and jump over here and do a quick macro take with you. It's very, very important because we have been seeing, right, here you can see equity markets under pressure today, NASDAQ off 1%. We've had that first sell impulse take place. When I say sell impulse, simply that trend line off of the November low, and then extending it out to where we hit it again here in December, right? Since breaking down, here's how you know that that's a good trend line. After breaking down, price then came up, and that broken support has held as resistance right over here. This is obviously something you're all aware of because in real time, we talked about it. The next thing we talked about was this bar, this inside bar that did not make a higher high or a lower low than the previous bar. And we talked about how the break, whether up or down from here, and also to be careful of a fake out in either direction, would likely send the trend. And it has been to the downside thus far. The next thing that we added over here then was this dotted trend line coming off this December low into where we touched it here in January. And if we break down from here, that would be the second failure taking place. First failure, trend line break. This would be the second failure taking place. If that were happen, potentially and likely a larger correction is underway. But one of the things that we've seen happening this year since January, and we've been all over it, is, well, here's the dollar. We saw, and this was extremely hard, right here on Friday, January 5th, a break of this trend line occurring on the DXY, the US dollar index. Once that happened, we said, like that's a tough one. Price wicked up to the top, wicked down, and was closing almost where it opened. Yes, it's closing outside the trend line, but that's really tough. That's hard to distinguish. And then price went sideways up until yesterday for a long time. You can see this outer breakout of the channel is in effect. Price coming into resistance though. Not easy, never easy. Here's another view of the DXY we were looking at, and we had over here that tighter channel You could see once it broke out yesterday, it's made it all the way into the yellow trend line. So it is into resistance. One of the things we were looking at, if we start seeing a rising dollar that's occurring off of this trend line break, if we start seeing yields begin to rise, bond yields begin to rise, and then we looked at the 10-year. By the way, remember, this is coming into resistance. So for this move that's taking place, right, when I say move, after the trend line break, extremely tough sideways, but now a clean and clear breakout, for this move to continue, you're going to need to see us break above that yellow line. If we do break above that yellow line, well, I would say that, I'm just going to just show you the whole area. I'll borrow this one, right? You can see that over here, resistance. Look, that's a light area, but this is the zone that likely we're targeting if we do close above that yellow line. The 10-year, though, however, keep a mind on this area right over here as we're into resistance. The 10-year also is, and we see that breakout occurring. By the way, here's an example coming down to the 2-hour time frame. This is what we're tracking. These two touches is where the trend line was drawn, and then we have it all the way coming down. And we've had it forever, and you could see as price came into it, it was respecting that trend line as resistance, right? And then what we did over here is take this trend line over here. I tried to make it straight. It doesn't look straight to me. Let me go make it straight. And then after we had that breakout, that's a one-touch trend line. And then you could see maybe it was respecting there, but you could see price came into that resistance before breaking above. Today, as the DXY is into that yellow line of resistance, we are looking at the 10-year on that breakout, also coming into that horizontal resistance we've had. It was brought up by Keith before going live that has been resistance, pretty strong resistance, once over here back into March 2023 and again in July. That's the area that that's either going to provide resistance today, and if that happens, good chance that we come back for a retest, and then we'll see if that we get a failure or break up. But you could see that price right now is having trouble staying above that line of resistance. That if we see a clear of this resistance and a bigger, higher move up in yields ensue, and if we're seeing a stronger dollar, those two things could be putting pressure on risk, equity markets, also on Bitcoin. So if these moves happen to be faded at that point in time, then likely we would see not only Jim Cramer said that, equity markets are getting ready to pull back over here. Maybe they're getting ready to rip up. We're going to need the dollar and the 10-year yields, bond yields to come off if that is the case. If you are here live and you have not yet smashed that thumbs up button, please go ahead and do so. Let's continue on. So, I was thinking about this myself today, Ace, but in so much as that, if you remember going back to that first week of January, and don't forget, this was tough, but we're like, at the same time, it was said during the session, like, is this just close your eyes and stay on the right side? And I wasn't able to do that. I had to kind of stay neutral, just marking where it was occurring, and then give it that room. And then it became apparent just yesterday on the breakout. That's actually when Davos started. You see the breakout. There's other things that happened. So we're going to, not just Davos, we're looking at what happened in UK today with their CPI print in 1 second and how that's affected global markets. And you're seeing the dollar and bonds, the dollar rise and the bonds sell off because of that. And then here on the 10-year also, we were watching this, didn't break, but we were looking for the breakout occurring. You can see, let me come to the 12-hour chart for whatever reason. It's not until yesterday that we have the breakout above both of these trend lines, but it is something that we were watching and tracking. So, the charts here, the charts here were given the tell, and we were monitoring them. and we were all over it. The other thing that we're watching is oil. And oil, right here's crude oil, is like, because if we get all three rising, if we get yields rising, the dollar rising, and crude begins rising, that could get ugly for risk. I would expect then a deeper correction in the equity markets, and I don't think that Bitcoin would be immune because we're not seeing a massive amount yet of inflows into these products. If that were happening, yes, that would continue to give a boost. But I do believe from today and through the rest of the year that those spot ETFs are going to be providing a constant bid. I expect that the amount of inflows that occur over the course of the year are significantly greater than they are today. So that's one bit of, having the wind at your back for sure that's taking place. But oil is also close to a trend line break. And if it were to break out, that green line you're looking at in that box, that is the zone that the U.S. was supposed to be refilling the Strategic Petroleum Reserve. They did by if you had this giant pool and you put a few drops of water in, that's about as much as they've refilled so far. China's been stocking up on all this cheap oil. They've been filling their reserves. They're expecting by the end of the year to see higher energy prices. So they're stocking up now. The U.S. is thinking about elections, I guess, and that high inflation. So they've been draining their strategic petroleum reserves. I don't know. This could, if we get it's not even high now. We were talking yesterday about needing to clear above this level, $76 a barrel, for some type of confirmation. But a close above this trend line and that green box providing horizontal resistance, that's a decent move into the area and a good place to manage your risk off of. That would be a buy impulse taking place. We will continue to watch out for it. Mean reversion or reversion is going to come up as we get to system trading in a little bit. So I'm glad you mentioned that. And then I want to take a look at, so that could be the best case, right? We have this breakout occur on the dollar, a move into here, resistance. This is nothing more than a bearish continuation pattern. It could even make it as high as that zone we were pointing out and still be a bearish continuation pattern if it breaks down. The one wild card or the other tough thing, though, is, the U.S. debt continues to ride at an exponential rate. And are we going to see these bonds begin to reflect that? This would be the first sign of some type of resumption back down since the buy impulse. And anything, I suppose, if we just borrow this for a second, look at if you could appreciate those two touches over here. I can. And I can make it actually perfect off of that borrowed line. But, even up to the top of here, and you got some all the way up to this area over here, that could still be nothing more than, at the end of the day, a bearish consolidation pattern developing and mean reversion. But I'm not so sure. I'm kind of always trying to watch where I'm wrong. And we've had a strong move that has taken place. Sometimes you get quick, sharp snapbacks, just like over here. This was a sharp sell-off. We were on the right side of it, and then you saw a sharp move occur. I would not be surprised. Anyway, I'm not clear on it, obviously, so I'm going to let it go. But we are watching dollar, 10-year, and oil. Jumping over, and I talked about that we saw out of the UK, the CPI, and that upticking again back to 4%. We have some comments to talk about that. And the headline, sensational perhaps, is global rate cut hopes plunge. Sure know how to write a headline. After the UK inflation, laggard misfire. You could see a couple of things over here. Christine Lagarde is saying that, and this is over at Davos, got all the planners out at Davos. We're not going to get into that today, but obviously you probably have seen the tidbits out on Twitter. She said that they need to walk back the expectations of an April cut. This is really important here because we're like, look at this in the lens from the Federal Reserve and as the market is pricing in a March cut. When asked about rate cuts in 2024, she warned that the market expectations of these earlier cuts weren't helping policymakers in their fight against inflation. Oh, so it's the market pricing in when they're going to cut that's to blame for the inflation. It's definitely not the Europe's zero rate interest rate policy and all of the printing that is at fault here. It's the market that's causing like a problem here in the inflation. It's not helping our fight against inflation if the anticipation is such that way too high compared to what's likely going to happen. You could see the inflation reaccelerating unexpectedly for the first time in 10 months over in the UK. The rise in inflation today suggests that the market got ahead of itself and expecting early rate reductions, said Associate Director at Fidelity International. And rates are going to fall this year, but market expectations around when and how are going to be very volatile. Let's take a look at what this meant for US markets, which we have seen a reduction. Let me go ahead and to compare. And you can see compared to yesterday where we were showing a 63% chance or probability of a rate cut occurring in March, we're now down to 52%. So that is off of the UK's uptick in inflation, quite significant. You can see Christine Lagarde pushing hard against the market. My concern or my thought is, well, what's Jay Powell going to do over here on the 31st as we have the FOMC statement and press conference? Will Powell also do the same? Will he, giving the market ample opportunity to reprice itself before the March meeting, it's almost 2 months, let them know that they are mispriced? And if that's happening, obviously we would see then probably the market here price in a higher chance of that first cut occurring in May. A lot of people, I believe wrongly, are pointing to that, well, the market needs to correct. Now this is 10-year rising, dollar rising, and if oil rising aside, if those things aren't happening, people are pointing out that, at the time that the Fed begins cutting, usually markets are under pressure. Not really true on the first cut at all. Not normally true on the second cut either, but usually by the third cut and then the rapid ones afterwards. Now, if they're saying that the market's mispriced and that's priced too early and it gets priced back to May, and our base case is it could be March or May, then if the first cut's not occurring in March and you're talking all the way into the second quarter, well, isn't there much more runway out there for equities here to continue to continue their rise? I think so, right? Anyway, there was another punchline to that. I have it out on the Twitter. I forgot, but I think this is what the market and why the market is pricing in those cuts so early. We are expected by the end of the first quarter here, by the end of March, because of the U.S. Treasuries continuing new issuance of T-bills. You can see that these offerings continue, another 170 billion, and this just continues and continues, that those funds, and we pointed that out all the way at the top, that they would, before the macro voices got all involved, we pointed out likely where that would come from. People concerned about a double whammy tightening. We addressed it before it happened, and then at the time of the event, we said, you know what? Likely it's going to be just net neutral. That money's going to come from here. It wasn't really net neutral. It was actually accommodative for markets. I missed on that point. I'm also thinking if it continues to be accommodative, as this is drained over this quarter, that likely is something else that could likely help risk assets. I still think that there's plenty of runway. But once we get drained down to zero, the Treasury continues, I think, and the quarterly report in the first quarter from the U.S. Treasury is going to be the event of the quarter, when they let us know how much money they plan on raising in the second quarter and in the third quarter. Because if it's too much or more than the market expects, that might cause some problems, and that might cause yields to really turn around and rise. Right now, that money has been coming from the reverse repo. Once that treasure chest is no longer there, it becomes a problem. I think because we've seen signs of the SOFR rate spiking, that is why the market is pricing in the cuts to begin into March, which I believe is quite early. I mean, May is always kind of where we felt comfortable, but if the market prices in March, we're going to go with what the market is pricing in. The Fed, right, is not like if you come up into the week of the meeting and the market is pricing in March, I think only one time has the Fed not acted in favor of what the market has priced in. So rewinding and bringing it back to, there was a point I wanted to make about, quantitative tightening is also expected during that March meeting. And also at this particular meeting over here this month, we're going to hear likely some talk about it, some questions in the press conference about it. And in the following meeting minutes that we get from this meeting, we will hear discussions about tapering the quantitative tightening, which again is more loosening taking place in the markets. Now that we got that little tidbit of the macro, let's move over to trade setups and move that into system trading. So I'm going to go ahead and pull up over here Bitcoin, and we're looking at here on the left CTM 2.0 and on the right CTMX being built on top of CTM 2.0. Right now they're both out of the market. You could see this big bar over here, this long wick up. That's the day that the spot ETFs were launched, shortly after Bitcoin closing its position, and has since just been out of the market on the sidelines, still much closer to attacking on the upside. Any resumption up is going to lead to a long entry, and still significantly a big distance away from having to or looking to attack to the downside. We would be having to take out this line that we put down over here for us to be attacking on the short side. This is still a very bullish structure that's in place, and we are much closer here to executing on the buy side. Ethereum continues to hold its open position. You can see about 6% into profit, and if it were to exit this position at this point, it looks like it would be slightly into profit. Still a ways to go. Solana, you could see it's getting right. Oh, looks good here, Solana. Solana, obviously, as you know, has been on an absolute tear all of 2023. This is back tested to 458%. We started over here in June, and the forward test since June has obviously been spectacular. You could see it really here. You could just draw a trend line in the area that I'm looking at. Let me go ahead and do that. And you can see that looks like it's flirting with the breakout. We're not yet close. We're so close. You could see long side deviation, just kissing, getting positive here, and then we're missing the JV, the volatility filter, and the CTM filter for giving that open door. So Solana here potentially getting ready to resume out. That's pretty cool to see. And looking here, Cardano, after that massive finally. This is in November, October, the entry. The rest of the year was spent going sideways. When I say going sideways, like no gains, no losses, slight loss, -4%, running down in drawdown during that period. And then finally the momentum kicks in and the moat captures it. It also looking quite similar. Looking here for the next potential entry. Still would need to take out this area that I'm highlighting right over here. That point is where it would be looking to potentially kick off its long. Looks like well ahead of that trend line, that CTM 1.0 trend line. It would be looking to take in that long trade. We'll monitor those entries in regards to those trend lines and see where we get in. I want to talk about some system trading. right? Those are, oh, by the way, before I do that, then let me just revert back over here and pick up where we left off yesterday on stocks. Only because when I talk about system trading and when I talk about obviously the trade setups we were just looking at on Bitcoin, Ethereum, Cardano, Solana, the stocks here play a role. This is right now you're looking at Tesla on the 1 hour time frame, and Tesla, right? This was introduced to the community in January 1st, 2023, the 1 hour time frame. So this is a forward test. This isn't a back test. That's 49% with a 19% drawdown. That's trading both sides. This is CTMX right now on the 1 hour, and it back tests significantly better than CTM 2.0 on the 1 hour. Just making note of it. All of those are out of the market right now. But on the daily time frame yesterday, on the stream, you might have noticed that there seemed to be a discrepancy. I talked about how we didn't take the buy side trade over here, right? But there's a couple of sells that are missing. I'm only looking at the buy side over here. You could see that this is just the buy side deviation. I was looking at this, right, for like a Roth and just buy side only over here. Go ahead and add the short side in over there, and you could see now the difference in taking place. YAR, I still feel like there's a trade from December 19th that's missing over here. So I'm not sure. Yesterday that seemed to be ironed out for myself. What's going on over there? I wonder if this is using real-time data. I use real-time data. Could you check with me if you were using real-time or delayed data on that when you watch this session? So that's Tesla on both sides. FNGU also on the 1 hour time frame. This is a forward test now from January. This is 189% with a 19% drawdown, forward tested. And keep in mind over here, because we're going to talk about something very important when we get to system trading, why I'm showing stocks and the performances over here over that past year. This is on the daily time frame, and unfortunately, we didn't begin forward testing this until June, right? This was June of 2023. This is when this was launched over here. I'm so surprised here, but since June, I am flabbergasted. That's the 1 hour. That's why. Sorry about that. I thought I was on the daily time frame and I was showing you what that looked like. So I guess I'll show you the back test on the no, this is all forward tested. Excuse me. Got confused there for 1 second. This is what I meant to say. This is FNGU on the daily time frame. This was not introduced though at the beginning of the year. This was introduced into June. So the back test on the daily time frame quite well, but this was only forward tested since June over here. Minus 11%, 25% into drawdown. And you could see over here, this whole period is giving it problems when we were into correction. All right, keep going. This is NVIDIA on the 1 hour, and NVIDIA absolutely crushing it, holding on to this position right now, 8% into profit on the daily. But yesterday, I let you know that because of the Tesla and FNG CTMX profiles giving significant improvements to the 1 hour and the community looking for a 1 hour solution on X, I'm in the process of working on it, making progress over here. This is from 2016 to present though. The return is marginally greater from 2020 to present. Drawdown marginally better, but still need to take a strong and good look at it. And hopefully, maybe by the end of the week, we have a strong candidate in place to continue forward here on NVIDIA on the 1 hour. Let me jump back though towards system trading and take a look at a couple of thoughts over here. This is continuing off of when we were looking at Renaissance Technologies, Jim Simmons, and how in so many ways, the way that our team here, the way that we're tackling the markets is really quite similar in certain aspects to the way that Renaissance is doing it. So Simmons points out, like, markets often defied traditional logic, he did see some structures reoccurring in the markets, and that's quite interesting because I mean CTM is quite gifted at being able to deduce the structures on any asset that occur within the markets to pick up on that market structure. So being that, and we talked about that on Bitcoin today, and I pointed it out to you and I made note of it and said that later we would be talking about it as well. I wonder if picking up the structure that we use for discretionary purposes and trading could somehow be implemented into some type of edge for our systematic solutions and tradings. Well, look, I want to come back to this before I move forward and just kind of try to iron this out over here. And you're saying Tesla on the daily time frame. And for me, it has a trade on December 19th on settings. It has entry for strategy long unchecked. Thank you, Luke. So that was the second thing. And this conversation is on the Discord inside the stocks discussion channel. The script, there's nothing wrong with it. On your script, and if you go ahead and you get the template off of the dashboard, it's correct. But on I don't know how or why it happened, but these two are reversed. And let me show you the difference. So that was an error pointed out by Yar yesterday. And let me just go ahead and correct them. Thank you, Luke. So that's no big deal for this time period. But come back from 2020. Let me show you the difference. This is the way that I had it on yesterday's stream. And I for somehow got messed up. And that doesn't look quite attractive. 179% gain on Tesla buy and sell side since 2020. But I had that an error. Thank you, Luke, for clarifying that. That's much better. And that's long and sell side. I personally, and the reason I had this checked off like this, I personally, I mean, I believe the long side on the daily is the way to go. Obviously, there's an increase in performance, slightly in drawdown as well, in using both. And likely over here, the short side, just jumping over to Tesla and just looking at the short side alone on the 1 hour time frame. And I think that is providing much more of an edge and much more alpha. That's from 2020. So compared to over here, if you're just using the short side alone on the daily time frame, the 16%, right? I personally think that the 1 hour here is offering significantly greater edge, 200%, right? A little bit greater drawdown, but I'll try to keep it clean. I'll have both sides on the daily over here as we do our work together so that we are in sync. And I'll try to make and save different templates when I'm doing some of my own, the way that I'm looking to attack things. Yeah, it could be automated through Traders Post and TradeStation. It could also, I believe, be automated through Capitalize AI and Interactive Brokers. So back to some of the system trading over here. Ray Dalio. Now, we're talking about Jim Simon here, who is the founder of Renaissance Technology, the best performing hedge fund there is, and Ray Dalio, Bridgewater, the biggest hedge fund ever. Not best performing, but largest. He's saying there is one holy grail in trading, and that is uncorrelated strategies. All right? And we do a really good job in diversification. Here is Bitcoin, Ethereum, Cardano, Solana. And you could see, for example, just to keep this simple and easy, that we talked about Cardano running sideways for all of this year. Just not making new all-time highs, running sideways in drawdown until catching that last trade. And you could see Solana making those consistent new all-time highs throughout. And then you could see in these other areas over here why maybe Ethereum is running sideways. You see Bitcoin here peaking up, new all-time highs. And this helps diversify your equity curve. But this is doing it with strategies that are highly correlated. Like there's a high correlation between Bitcoin and all crypto. Adding stocks, and this is something that we don't emphasize enough, but adding stocks, which is an uncorrelated strategy. I know that because of the way that our mechanical strategies work, that even using correlated strategies, it helps reduce that overall drawdown and smooth out the equity curve. But adding stocks into that picture is something that we now have the solutions in place for over a year. And the way that they help smooth out that equity curve, I don't think is focused in on enough. So that's one point to make over here. And then, so independent signals, meaning uncorrelated predictive signals is key. So I'm also thinking, and this is getting off on topic, but we were talking about it just last night inside the dev channel and how it would be nice, and we talked about it in yesterday's stream, to have a lower time frame solution. For example, whether it was the 3-minute, the 5-minute, the 10-minute, just running as a hedge. If we're on buy side only on Bitcoin because we're in a bull market, attacking on just the short side on a smaller time frame on a profitable strategy, that might offer a really good hedge. But TradingView offers us limitations that we don't have enough data to go ahead and develop those solutions on the smaller time frames. On the 8-hour time frame, it's much different. You get to trade through a bull and bear market, a Fed tightening cycle, and an easing cycle, and go through many, many different years of different regimes taking place. 6 months on the 5 or 10-minute time frame is not enough data to go ahead and have any time of confidence that you have an edge in place. So in focusing in on these uncorrelated predictive signals, right, and mentioning we do a good job, adding stocks in really does a better job. We don't focus in enough on that. Which is why you see me bringing up our stock solutions in the streams a lot more frequently. And then the other thing over here, right? Like we have trend strategy. That's the strategies we employ. They're momentum-based strategies. So momentum, strong trend, that's what we capitalize on. Where our strategies are weak, and again, you could say, well, I mean, weak, and this is how Bitcoin backtests from 2020 till present, and that's not so weak, 2,600%. I remember when we were at 800% from 2020 with a 30% drawdown back in March of 2022, and we thought that was a pretty good achievement, right? Come back over here, obviously, and just give this more data, more time, and it's an elegant solution. Right, 741,000% return, 12.5% drawdown. It's an elegant solution, but nevertheless, it's where the system lacks is when price is consolidating. It's a momentum-based system. It's a trend system, which means that often price is doing what? You remember it because we looked at it earlier in so much in the session when we were looking at things like this, and price is not often breaking out. Price is often consolidating, right? And let me run it back over here. These are the periods where we run sideways using multiple uncorrelated predictive signals. Doesn't mean only coming from crypto and stocks, which are to a degree uncorrelated. To a degree, they're also very correlated. But an uncorrelated strategy, to me, means also not just the momentum-based system, mean reversion. You've heard me bring that up so many times, the CTM kicker. what I believe is going to be able to take an elite strategy, a phenomenal strategy, and be able to improve upon it drastically is using those uncorrelated strategies, right? Putting them together, using that mean revision, so, that mean reversion strategy, which will do its thing during these periods of consolidation. That's where it's going to clean up. Yes, that will underperform on the breakouts, but that's where our current strategy massively outperforms. And together, that is something that I'm hoping that throughout 2024, we're able to add into our arsenal as we continue forward. Just again, the CTM kicker is really, really something that is going to really, really help. I'll mention it. I don't think that it really fits to us so well. But the third point that is brought up is seasonality. And it may, we know that David has been talking a lot about looking and experimenting with whether you want to call it bull bear phases, inflows, liquidity inflows and outflows, whether it was done through the Fed cycle or however it's done, but being able to look at different candidates, different strategies to be used during those different times. And that might actually entail what will be seasonality for us. And then there's a couple of final points over here, and I have them highlighted. And look, this is what it takes to be successful, and it's that constant research. We're talking here about Renaissance Technologies, the best performing fund ever. Constant research, Jim said, was pivotal to their success. We have the collaborative hive mind doing that each and every day, right? Predictive signals can lose their power. I think this is really important. I remember early on, Zuzu showed us an example of how that could happen. And, I think that's important. Always want to be, not just when you're discretionary trading, but you always want to be aware of your risks, of your downside. So predictive signals can lose their power. It's an important one to really highlight and focus in on. Now, again, we've honed in on certain assets. Technology, whether you're talking Tesla, FNGU, right, which is a leveraged FANG, or you're talking NVIDIA, we focused in on tech, which is expected to continue to outperform as tech goes under that exponential growth. We've also picked up on, obviously, an asset class, Bitcoin and crypto, which is undergoing tremendous growth and is expected to go under tremendous growth, specifically over these next 10 years. So I would imagine until Bitcoin comes from not just the current situation it's in, when I say current situation that it's in, we talked about that. Right now, we were in that early adopter phase, and we're getting ready to jump this chasm, right? On the S-curve, you call it the hype phase, the facing reality phase, and into that ultimate market opportunity. You could also see that the early innovators, those were the early ones, right? I'll say it was during the hype phase. And over here, up until today, you have the early majority. And now with the launch of the ETF, it looks like we're getting ready to hit the early majority. After you pass through early majority and the top of the early majority into late majority, that's where you'll start seeing the asset class leveling out and falling off. That's likely when we would see a lot of these predictive signals losing their power, but we're already ahead of that. Meaning you will always need new uncorrelated ones to add to your portfolio. And when that was happening, right, we would just be taking our strategy and putting it into whatever market deemed appropriate at the time. And then finally, we have network with fellow quants and traders for idea generation is crucial. That also is something that we're lucky to share here in CTM as we have the collective collaborative hive mind. And it is absolutely, and speaking of which, and just building over there, last night in the discretionary channel, Flav vs. Frav, he pointed out this book, Tiny Changes, Remarkable Results, Atomic Habits. It's amazing because we always talk about, we started at the beginning of this session talking about those small incremental improvements, tiny changes, remarkable results. And I said, that's the second time this week that book has popped up, right? Flav versus Frav. This is coming off of networking with fellow quants and traders, idea generation. You see that taking place on a high level throughout CTM Core, throughout the Summit team. Everything about trading is discipline, routine, and psychological. I got the chart part down to an expert level. Now it's time to round it out by getting myself in check. 7 figures trading is only achieved with a strong mind and positive lifestyle. This is also something early on we spent a lot of time focusing on and kind of have wavered off of. Another thing is yesterday, and I don't know if it's because of the new year, I've received so many communications over the past 2 weeks and people just talking about the effect that CTM has had on them, on their lives. And one of them was someone saying, I remember you telling us that we need to look 7, 12 years out. He's now being with CTM for 3 years, calm, cool, and collective. I totally get why what you're saying. As my account continues to grow and compound, I now see why 7 years is going to be such a milestone. Flav versus Frav, I love it. This is how you take it to the next level. You have my full support and admiration. Flav versus Frav, always humble, giving it back. I wouldn't be here without you and everyone else. CTM changed my life. In 2 years, I went from $10 on a winning day being amazing. Now 1K on a winning day is normal. I would never have gotten here without my team. And that right here is so important and something we get to share. And that, my friends, is today's session. Hope you have a beautiful day. God bless you. I'll see you all on the inside.